you've just joined us, you're watching Stockwatch, and I guess if you haven't yet, now is the time to learn how to junk-proof your portfolios. And joining me this evening are Gerbrand Smit from NEFG Fund Managers and Chris Gilmour from Absa Stock Brokers. If you'd like to send us questions, please do. You can SMS stock and the question to 41392, or you can email stockwatch@bdtv.co.za. Gerbrand, Chris, fun times ahead. Of course, we should have junk-proofed our portfolios maybe when the rand was 12.50 or thereabouts. But what do we do now? And what do we expect now? Is it going to be quite bloody for SA Inc. stocks tomorrow?
Well, look, I mean, to take your first point, we've been saying to clients for quite some time now that you should be taking advantage of the strong rand to get into things like global equity portfolios. And I think that's largely what they've been doing. It was always difficult to try and find the value in the stocks that were predominantly dependent on the local economy. Be that as it may. What do we do now? That's the difficult part. Gerbrand and I were sitting out there and just discussing this. This is a ratings downgrade on sovereign debt, on foreign currency sovereign debt, but with a negative outlook. So effectively, if you think about it, you've had a double whammy here. You've gone from a negative outlook, you've had the downgrade, plus you've gone to negative outlook as well. So the chances are that if we don't adhere to prudent fiscal policies in the same way as Pravin Gordhan and Mcebisi Jonas were doing, and we're being amply rewarded for doing so, then we could well find ourselves at the next meeting looking at another downgrade.
Yeah. Gerbrand, financial stocks, the retailers, are they all going to come under pressure tomorrow? Because this, of course, happened after the market close.
I think so, and I think you're going to see a jerk reaction again. We had one last week. We had a bit of a bigger one on Friday morning. And we're probably going to have one tomorrow again. It's not to the same extent that Nenegate was so far, but we might look at something similar that after this reaction from the offshore markets and from S&P. We got another rating agency, maybe I think both of them are reporting on Friday, which is scary as well.
Well, Moody's, I mean, Fitch hasn't actually said when they're going to when they're going to make any move on us, so they could spring it at any time. Standard & Poor's didn't give any indication that they were going to do this today. So it was in June, as you say, that the scheduled meeting was to take place. In all my papers, I had printed out the Treasury statement, but the one thing that they do allude to, it's the silver lining, I guess. Melissa Gigaba's team was quick off the draw, is that our local currency debt is not essentially in junk status, if you like. It's still sort of BBB minus. And 90% of our borrowings are denominated in rand. Is that right to sort of point towards that, and it might not actually be as bad as we're going to make it out to be?
I suppose you can draw some solace from that. And among emerging economies, in fact, South Africa is relatively unique in this regard, and that's actually a very, very good point. However, and again, we were discussing this before we came on air, as we become increasingly shut out of global markets, debt markets, because of the increasing expensiveness of it, we're going to have to rely more and more on the local market. Now, here's a thought. How about a reintroduction of the prescribed asset requirements as we had in the 1970s, 80s, and 90s, and which were only abolished in the early 90s? And that means that as a financial institution, you are required by law to put a certain amount into bonds. That might well happen, just so that government can actually get their funding mechanisms right.
I can't see the asset managers being very happy about that.
It would have a devastating impact on equities, absolutely.
Okay, so in the absence of the laptop and the questions that are going to be coming through, just maybe moving aside from, we were going to talk about Verimark and Astral Foods trading updates, but I guess they aren't quite as exciting in the midst of a downgrade. But just a quick comment on those. Astral Foods, less bad than expected, and Verimark actually is surprisingly going to see a big increase in headline earnings per share, partly because it raised prices as a result of the weak rand, and it was saying, oh, well, the rand had actually strengthened, and so things were looking up for them, but I guess that might sort of reverse tail.
Yeah, so many times they're importing and then selling to the local consumer. So what's happened over the last 12 months is we had a strengthening currency. They probably won't repeat those numbers in the next 12 months because we know all what's happening over the last week and the downgrade just happened. On Astral's side, I think, you saw feed prices coming lower, but they had their own problems on overstocking in the market, so they had to cut back on production, and they also had the brine issue where they had to put less brine into the kilograms that they sell, which was negative. So still a negative trading statement for the poultry guys. I think, well, that over time the poultry guys will probably do a bit better, especially on the maize price, etc., which is one of the biggest inputs. It used to be over 5,000 rand a ton. It's I haven't looked for the last week,
Below
but
2,000
a week or so
probably.
back it was 1,800, 1,900. Plus probably a 10% movement now with the currency that's again negative for them. But still from 5,000 to 2,100 it should be positive.
It's a big kicker. Okay, well, getting on to questions. Outside banks that will be most impacted by the downgrade of our current foreign currency rating. So, I think two stocks outside of banks that will be most impacted by the downgrade. So besides the banks, which other stocks do you think would be hard hit?
Life insurance. They got also a cost of capital calculation, embedded value calculation. Retailers will probably follow suit. A company like Imperial, where they also got car sales, etc. in there. There's actually a lot of SA Inc. shares that will not like the weaker currency.
Yeah.
Okay.
And I think that's the point that Gerbrand's making, is that companies that are predominantly reliant on South Africa for the bulk of their income are going to suffer. So you've mentioned the banks, you mentioned the retailers. Bear in mind that we're going to get a lot more imported inflation coming through because the rand is probably going to weaken. We're going to see much higher interest rates coming through. I don't believe that the current bond yields have reflected this kind of situation. Downgrade plus negative outlook and the likelihood of more to come.
Okay, so you would shy away from them, or do you think because they might get massacred on the market, it's actually a reason to buy them?
Yeah, I think they're not there yet. Look, it worked with Nenegate, but they reversed the finance minister decision after 3 days. If we don't see something similar, I won't pile into the market on the banking stores, yes, etc.
Okay. The panel's view on the JSE and Old Mutual. Okay, so Old Mutual first. I mean, this is a stock that has plenty of its own challenges, outside of any downgrade issues.
The clouds appear to be clearing with Old Mutual. The program that they've been embarking upon, Bruce Empill's program to extract value for shareholders, appears to there seems to be more light being shed on this one. And I think in the longer term, Old Mutual actually is going to be a much cleaner, leaner, streamlined operation. I actually quite like the look of this one.
Is Old Mutual, though, not going to maybe bear the brunt of, because they've got so many South African assets still, they're in the process of unwinding, they've got Brexit issues. I mean, are they going to be a sort of hit from all sides as a result?
Well, I think they're going to take this negative. I mean, it's South African asset. It's listed offshore as well. They're going to get hit on the London Stock Exchange, etc. But there will come a time where it's cheap enough. We thought it's already cheap enough. It's already before this last week, it was at a 25% discount. Nedbank has taken a bit of a hit, so it's probably at similar levels. It came down itself a little bit. And they want to break it up into 4 pieces, and they're cutting out costs, etc., from head office and so forth. So, most fund managers do carry a heavyweight holding in Old Mutual, and I think rightly so.
Okay. In the JSE, there have been a lot of concerns about as to why the share price has been persistently weak. Do you think it's actually entering a level where it might actually be quite attractive?
I think over the next few days, next few weeks, next few months, I think the volatility that's going to come from what's been happening in the past few days is going to be very beneficial for the JSE. But in terms of the possibility, and I know a number of speculators have expressed the opinion that the JSE will get bought out by the London Stock Exchange, I think that's now consigned very much to the back burner. We're no longer going to see the Deutsche Börse and the LSE having their merger. So that, I think, is gone. There are also, and I don't take these too seriously, but you've got the other exchanges, these smaller exchanges coming on and providing some sort of competition. But frankly, I don't think their content is going to have such a huge impact on the JSE.
Although you do have to sit up and take notice when African Rainbow Capital, which is backed by some very savvy people with very deep pockets, comes and takes a stake in one of their would-be competitors, which is A2X, which hasn't actually started operations yet, but it's gearing itself up to do so.
Yeah, look, I'm not too concerned about the competition, but I think it's something that's in investors' minds at the moment. The latest results that came out weren't the greatest as well. I think second half was actually -4%, -5% if you look at the whole year's figures correctly. And they're on a high base on the earnings side. So markets are highly valued as well, and a bit on the expensive side on a global front. And it's probably some investors took some money off the table in some of these exchanges because when you got downturns in markets, normally there's not much transactions going through as there was in good times. So probably rightly so. At a 12p, it's starting to look on the cheapy side for us.
We have viewers with long memories. So, hi Giulietta, I'm pretty sure Gerbrand picked Implats as his Christmas stock pick, if memory serves me right, and I think memory does serve him right. He said that he expected the share to reach 80 Rand by year end. Did you say that? Please ask him if he still holds his view and what is going to change to make the share go up to this value.
Yeah, look, we got a rand that's depreciating at a huge level. We were, however, very disappointed with the statements and trading statements and results that came out in the last month or so on Impala. We were not happy with them, and if you looked at last year's statements, they were very bullish and so forth, and they didn't deliver on most of their promises. So, but still, I think if the rand's going to depreciate some more, you'll see positives from Impala's side and some of the other platinum players. But a lot has changed on Impala's year statements from when I made that statement. But we still like the platinum industry long-term wise. We're still happy to say there's deficits coming on board. Certainly on the clean energy side, we saw China taking some steps again today. They just need to do a bit more on the catalytic converters, etc., to actually start getting the platinum price to move. Eh?
Yeah. Okay, so you're still in your Impalas, but maybe somewhat tempered expectations for the price.
Yeah.
Chris, any thoughts on platinum shares or gold shares? Do you buy gold shares now? I mean, is this an area to park some money or just...
Look, gold shares are going to move on two things. One is inflation. The other one is and significantly higher inflation levels than we currently have around the world. And the second thing is a lack of faith in fiat currencies. And I don't think we've got either of those to the extent that's really going to do an awful lot with the gold price. So no, I would tend to steer away from it at this point in time. If you're looking at it purely from a foreign investor's perspective, i.e. the dollar gold price. Looking at it from our perspective, and I think I'm probably in agreement with Gerbrand here, if the rand is going to depreciate further, then gold share is probably looking quite attractive.
I'm not sure if we just felt a rather large tremor, or maybe it's the aftershock of the junk downgrade, but that's all rather interesting. And then just maybe a minute before we get to the break. Actually, we'll leave it there for the moment. If you'd like to send questions, please do. You can SMS us, stock and the question to 41392, or you can email stockwatch@bdtv.co.za.